Welcome back, everybody. It is June 3rd, 2020. I'm Jerry Hall, and here's the view from Costa Rica. A quick peek at the markets show that all that incredible gain that we just saw 2 days ago has come back down to where it started. Bitcoin back under $10,000. Oh, my beloved XRP knocking on the door of exactly 20 cents, 20.356. What am I to do with you, XRP? Anyway, folks, I titled this video, XRP, Bitcoin, Ethereum, which of these will make you rich? Well, the question is, all of them have a very high potential to do so. The real question is the when. Now, there's another piece of that puzzle, and it's the how. I want to present some options for you, things to consider when looking at Bitcoin, Ethereum, and XRP. So I had to go to the Google Docs to write this stuff down because just verbalizing it isn't going to really, I think a lot can get missed. So, market forces that must be accounted for. Now, in the traditional legacy investment world, terms such as headwinds describe a downward pressure, right? A selling pressure driving the price down. Tailwind being something that will push the price forward or higher. So, I broke this down into kind of three categories. POW is proof of work. Coins like Bitcoin, Bitcoin Cash, Litecoin, Bitcoin SV, Bitcoin Pineapple, Bitcoin Diamond, Bitcoin Ferrari, whatever, however many forks that thing is taken. The point is proof of work, i.e. mining, etc. So these are some headwinds. These are things that are market forces that will put pressure to drive the price down. And that is cost to maintain the network, land, energy, staff, and equipment for these mining operations. The proof of work code reward reduction on a schedule, that's the halvings. Here's the thing, when the reward is cut in half, if the price of the asset doesn't double, then all of the margins get skewed. You got to remember, these mining operations are for-profit businesses. If they can't make a profit, they are no longer going to do business. Here's another headwind, activism. More and more attention is being paid to environmental issues, i.e. that energy consumption. Big headwind. This next one is one of I think is the biggest headwind, and that is government control over monetary systems. Case in point, do you remember how the US government reacted to Facebook's Libra announcement? I do. Here's another headwind, limited utility. Other than speculation and the greater fool theory, there's not a lot going on. And here's the thing, as we're getting smarter and more educated, there are fewer and fewer fools. No mass adopted commercial applications in the market. Proof of work systems do not work well for payment processing. Peer-to-peer, absolutely. You want to send me money? No problem. Person-to-person, there's a use case there, but it's very limited. It's not something that is going to drive the price up. Here's another big one, and that is it's already happening. We're seeing this in the marketplace right now. Displacement by more efficient technology. I like to look at both sides of the coin. So proof of work, tailwinds, this is the upward pressure. These are the things that can drive a market to higher highs. Well, Bitcoin has got the first mover advantage. Bitcoin is the most widely known digital asset on earth. But keep in mind, other than the name, very few people really know what Bitcoin is. It's still a big mystery. Now, Bitcoin does have going for it that it is a vehicle to exit the existing financial system. All you need is a device and internet. Bitcoin does have going for it. It has security, censorship resistant. Also, it cannot be seized. Bitcoin is ubiquitous trading pair on every exchange. Even on the XRP centric exchanges, Bitcoin is ubiquitous. It's matched with everything. Bitcoin has a very strong community and it's growing by the day as more and more people learn about cryptocurrencies, digital assets, etc. It does present a return on investment for owners through those DeFi platforms, Nexo type stuff. It has been acquired, so acquisition by large funds. But again, this is the greater fool theory. For instance, a very widely accessible fund is Barry Silbert's digital asset group and their Bitcoin trust. My grandma can log on to Schwab and buy GBTC. And it goes up and down. It follows the market. However, when you do this, you're paying a very healthy premium to the actual underlying asset. So when you look at your share that you bought of GBTC, you're paying approximately $3,000 over spot. So if Bitcoin is at $10,000 even, the amount of shares that you would need to equal a full Bitcoin of ownership value, that is, you need about 13,000. And that might scale up as the price goes up. So paying a premium that high for easy access, I guess some people are willing to do it. Anyway, there are some good things going. I see all of these tailwinds, these positive things for these proof of work systems as being very short term. None of these to me speak to long term value. And again, I'm going to close on POW, proof of work, with the greater fool theory. Very important to keep that in mind. You don't want to be the last fool standing, holding the bag. Let's transition over to these proof of stake protocols, Ethereum, EOS, Tezos, Cardano, etc. Here are the downsides, these headwinds that I see in the marketplace today. Each of these protocols has a different criteria for rewards by, So what that means is if you stake your ETH, you're going to get a different percentage return on your asset than you will with EOS or Tezos or Cardano. And what that does is it creates, this competition in the marketplace. Who's ever producing and giving its stakeholders the largest return will win. So it's kind of hard to pick a winner because none of these protocols are in full gear really doing this. They're not launched yet. Here's another downside, a headwind. The ancillary services don't exist for mass adoption yet. How many lawyers' offices can you walk into and say, I want to write up a smart contract for this general building contractor to build my house? How many banks can you walk into and say, I'd like to set up a smart contract to pay A, B, and C mortgage company for my new home purchase? How many service providers can you set up an arrangement with that can execute a smart contract on your behalf for your AT&T cellular phone service and data plan? How many Lyfts, Ubers, or Amazons can you have a smart contract with if you are providing a service for them, i.e. an employee? The answer is zero. Another headwind is the truth of the matter is that these networks are unproven, and multi-million / billion-dollar corporations are cautious with new technologies. They just are. Obviously, they're not cautious with, borrowing cheap money, jacking up their stock prices and not reinvesting in the actual growth of their company. They're not too cautious in that regard. But as it pertains to adopting these new networks and implementing them in the course of their commerce, a little slow. Here's another headwind, and this actually applies to every single digital asset. I just included it here. And that is, investors may take profits before real adoption. The speculative nature of our market may produce gains that after this extended bear market, people will take profits off the table. And I don't blame them. But that's a very real possibility, and that can keep the price down. And last but not least, as it pertains to proof of stake, there's no killer app yet. Airbnb hasn't been displaced. Uber hasn't been displaced. Lyft hasn't been displaced. All these intermediaries have not been displaced yet with this incredible technology. But let's go to the good side. Let's go to the other side of that coin with this proof of stake. Here are the tailwinds that I see in the marketplace today. The upcoming staking rewards, dividends. Owning an asset that pays you to hold it is what investing is all about. Staking may provide higher return on investments than legacy products. Now, any of you that keep an eye or even slightly aware of what's going on in the financial markets today, to loan money and get a return on it is no longer a viable business. Or at least it isn't what it used to be. It used to be you could lend money and get a healthy risk-adjusted return on your investment. So if I lent you $100,000, you would pay me back 10, 12% over X amount of years. And that risk-adjusted return on my investment made it profitable and advantageous for me to lend money. But in zero rates or near zero rates or negative rate environments, it's just not profitable to lend money. The game is borrow cheap money, and we've seen where that has gotten us. But let's continue. Another positive attribute to the proof of stake platforms that they are more energy efficient compared to proof of work. That investors are incentivized to remain in the system, i.e. the staking. The fact that this is now programmable money in smart contracts, this is incredible. This countless amount of applications that are known, right? All these developers that are developing things right now, and all the unknown future applications. There's something to this programmable money thing. All right, let's get to my favorite. This is I call it consensus. These are the federated systems like XRP, XLM, Casino Coin, etc. These are the headwinds. These are the downward pressures that I see exist in the marketplace and will persist until they don't. And that is resistance to change by long-standing corporations. Case in point, Western Union. Yeah, I know we had the anonymous Western Union employee leak that Western Union's making an offer on MoneyGram, and okay, and there's a lot of speculation, and I'm part of that. I see a place. However, they've had time. Western Union could have adopted this a year ago, but they didn't. There is a resistance to change by long-standing corporations, and it's not just Western Union. How about this? Moving money around the world is highly regulated, and there is a lack of clarity currently. Now, we're hoping with a lot of these bills that are being proposed, a lot of that clarity will come to fruition, but as of today, it hasn't. And this is the big one. I think this really needs more exploration. I don't have an answer. So if I pose this headwind as in a question, it would be like this. Why isn't Amazon, Airbnb, Lyft, and Uber using RippleNet, using the Stellar protocol? Why? I'd like to know that, because they're definitely companies that are not afraid of tech, right? So they're not afraid of technology. They're built on technology. They're technology companies. So what's the resistance? What's the barrier? All the information we get says they would benefit not only in a more efficient treasury department within their company, but a better, faster, cheaper experience to every one of their ancillary entities. So whether it be if you're a driver for Uber, or you're a retailer with Amazon, or you're a warehouse worker in Amazon, or you're a product developer and customer relations person with Lyft. Why aren't they? That's the question. But there's another side of the coin, and let's get to that. So this is the tailwinds that I see for the consensus federated systems like XRP, XLM, and Casino Coin. Being a bridge for trading digital asset to digital asset. We know this is coming. Infrastructure is being built. Existing legacy players are coming into the space. We're seeing it in Switzerland with regulated stock exchanges coming into place. We're seeing the BACs of the world actually starting to roll out their products and showing profits. This is enticing. How about this? And this is my favorite, the bridge for trading fiat to fiat. Ah, that precious US dollar to Mexican peso, the poster child for ODL. Let's hope it grows. Let's hope it continues. I hope it disperses itself like a flu throughout the world, one that cannot be vaccinated against. How about this? It's superior tech for payments. the Visas, the PayPals, and the point of sale systems. Wow, that's huge. Superior tech for treasury functions. I spoke about it in the headwinds. Your Amazons, Uber, Lyfts, etc. Bing, bang, boom. When you got employees all over the world, and those employees are dealing in national currencies other than the one your corporation works out of, i.e. most likely the US dollar, this is absolutely superior tech. It's instantaneous swapping. I mean, come on. It's superior tech for settlement of financial products, bonds, stocks, and a countless number of derivatives. And how about this? A return on investment for owners through the DeFi platforms, Xpool and Celsius type platforms. Obviously, acquisition by funds, i.e. hedge funds, endowments, and ETFs. It's all coming. Now, I'm going to take you to a chart. I'm going to show you something. So this is a snapshot that I pulled off of a blockchain backer video, which the bottom chart that's all highlighted basically shows you mid 2013 to today, or current within the last couple of days, of the XRP price action. The yellow line at the top of the chart is Bitcoin. Now, the reason why I bring this up is because as an investor, I want a return on my investment. And as I look at Bitcoin year over year, with the exception of 2019, it has produced a return on investment. That's great for the short run. But if I take into account all the headwinds that I see coming for that particular protocol and protocols like it, I don't know how long that will last. Head on a swivel, as Mr. Brad Kimes would say. And I come down and I look at XRP, and I see other than 5 distinct, very short-term parabolic increases with one minor, so a total of 6 aggressive moves up, this token does not have a great track record. And then I refer to the tailwinds that I see for protocols like XRP, XLM, and Casino Coin. Here's the thing. I'm going to do a whole nother video on this, but I'm going to leave you with this thought, because this is what is going to anchor the next video. And that is this. XRP has proved to the financial world that the cost to move money is nearly free. That's right. The cost to move money is nearly free. So when you're looking at your investment dollars, think about this. Do you really want to have long-term investments in anything that's in between a consumer and a service or product provider? Any intermediary is going to get crushed in the long term. That's right. Western Union, long term, bye-bye. MoneyGram, long term, bye-bye. Airbnb, long term, bye-bye. Uber, long term, bye-bye. Even possibly Amazon's retail part of their business, long term, very possibly bye-bye. When rent takers in the middle, long term, are going to get crushed. Be smart with your investment dollars, folks. Keep doing your homework. Keep doing your research. I'll continue to provide my perspective as I see it. I welcome comments that are contrary to my view, because it'll help me educate and understand. You know, maybe there's something I missed. So I welcome your comments. I also welcome all the incredible new folks. This channel has really been growing, and I am extremely appreciative of that. So I appreciate your comments greatly. I appreciate you hitting that like button, because it'll put these videos in front of people that haven't subscribed yet. And for those of you that really do want to support me to keep this channel growing, post it on Facebook, post it on Twitter, help get the word out. Folks, that's my take from Costa Rica. Until next time, Pura Vida.